Hello, everyone. My name is Grace Burke, and today I'm going to be presenting my individual report 2, a CBRE strategic analysis, and I will also be discussing how this organization aligns with my long-term career goals. Jumping into just a brief agenda, I'm going to give an overview of CBRE as a company, a justification of why I chose this company, a pestle analysis, Michael Porter's 5 forces, a VRIO analysis, an overview of their business level strategy, an overview of their corporate level strategy, then, of course, my interpretations of these strategies, as well as a few strategic recommendations. So, an overview of CBRE. CBRE is a global commercial real estate service and investment firm headquartered in Dallas, Texas, and they are publicly traded on the New York Stock Exchange. The company generates approximately $30 billion in annual revenue and operates through 3 major segments: advisory services, global workplace solutions, and real estate investment management. The advisory services include leasing and capital markets, while global workplace solution focuses on outsourcing and facilities management, and finally, investment management manages institutional real estate capital. What makes CBRE strategically powerful is that these 3 segments are interconnected through real estate expertise, shared client relationships, and market intelligence. So, of course, why I believe that CBRE fits me. I am a real estate and built environment major with a concentration in development, and my long-term career goal is to become a real estate and land use attorney. CBRE stands out to me because of its in-house legal and compliance teams, which support complex transactions and regulatory frameworks across global markets. This aligns directly with my academic interests in development, zoning, and land use policy, along with my long-term ambition to work at the intersection of real estate, finance, and law. And this would offer exposure to both strategic real estate operations and regulatory complexity, which is actually exactly where I plan on building my career. Going into our first analysis, from a political standpoint, CBRE is highly sensitive to interest rates and regulatory environments. Because commercial real estate is capital intensive, rate increases directly reduce transaction volume. Economically speaking, the firm faces cyclical demand, particularly in office markets following COVID. However, growth in data centers, industrial properties, and hospitality provide new revenue streams as of late. Socially, hybrid work has been reshaping office demand, as I stated with the political standpoint earlier. However, ESG expectations are also increasing client pressure for sustainable practices. Technologically, AI-driven analytics and prop tech integration are transforming brokerage and asset management. Environmentally, sustainability mandates and carbon compliance requirements are becoming competitive differentiators. And legally, CBRE must comply with global brokerage laws and, of course, their fiduciary responsibilities. The key challenge that I'm taking away from this analysis is managing cyclical exposure while adapting to structural shifts in office demand. Moving into Michael Porter's 5 forces, the industry rivalry is high as CBRE competes with firms like JLL and Cushman & Wakefield, which is already a highly competitive brokerage market, and they have some very strong competitors with similar customer bases and offerings. However, the threat of new entrants is relatively low due to a strong brand recognition and a relationship-based barrier, which is very prevalent in the real estate industry. The buyer power is high because institutional investors and large occupiers can negotiate aggressively and have the means to do so. The supplier power is moderate. However, top brokers do hold quite a bit of leverage because at the end of the day, they are the revenue generators. And the substitutes are moderate, and this would include an in-house real estate team, for example. The 6th force, which is a complement, would include institutional capital providers, developers, and technology vendors, and maintaining these relationships would be extremely important and valuable in the future. This analysis shows that talent retention and client relationships are really key to a true competitive battleground within these real estate brokerages. Going into the VRAO analysis and looking internally, CBRE's global brand is definitely valuable, rare, not imitatable, and organized to capture value. This would give them a sustained advantage. Broker relationships are also a sustained advantage because they are relationship based and extremely difficult to replicate. Many of these relationships have been given lots of grace and understanding over the past years, and clients really do like to come back to brokers that they are familiar with. Its data and research platforms create temporary advantage as competitors can't invest in similar systems. The AI and tech investments do represent a developing advantage as the AI field continues to change the industry and most industries in the business world. I think that the biggest risk identified here is losing top brokers, which would directly erode sustained competitive advantage. So jumping into the business level strategy, here is just a brief overview of a broad or narrow market scope relating to the cost and uniqueness, or you can say differentiation. Here, CBRE operates using an integrated cost leadership and differentiation strategy. From a cost perspective, it leverages global scale and centralized research to reduce operational expenses. From a differentiation perspective, it offers brand credibility, proprietary research, deep client relationships, and institutional advisory expertise. This hybrid positioning allows CBRE to compete as a premium, globally integrated advisory firm while still maintaining cost efficiencies through scale. This strategic strength is extremely important, but it does require constant investment in both technology and human capital. Moving on to the corporate level strategy, CBRE practices a related diversification, as seen here, across advisory services, outsourcing, and their investment management. These segments share real estate expertise, client networks, and data systems, creating synergies through the cross-selling and data sharing. And this would, of course, create a strategic advantage, which is just going to even further strengthen the client retention and increase lifetime client value. Using the build, borrow, buy framework, we can see that CBRE buys growth through acquisitions in emerging sectors and geographies. It builds competitive advantage through AI tools, proprietary data platforms, and internal systems. And it borrows through joint ventures and institutional capital partnerships. However, acquisition-driven growth creates integration challenges, of course. As shown on this slide, cultural alignment, technological compatibility, and brand consistency become more complex as the company scales, and this can become a logistical and honestly just integrational challenge the more global this company becomes. The central strategic issue here would be balancing aggressive growth with operational efficiency and integration discipline. So with that, I'm going to give you some strategic recommendations, and these are just based on my analysis. I'm going to just propose 4 strategic enhancements. First, I would double down on growth sectors like data centers, industrial logistics, hospitality advisory, and life sciences. These sectors do show structural growth rather than an unreliable cyclical recovery. Second, expanding AI integration seems to be an extremely important strategical move. Predictive modeling and internal underwriting tools can increase broker productivity and margin resilience. Third, implementing a stronger talent retention incentive, such as equity participation and long-term incentive alignment. Since broker relationships are a VRIO sustained advantage, protecting talent is extremely critical. Fourth, positioning CBRE as a sustainability leader would also expand ESG advisory services, carbon modeling capabilities, and sustainable asset repositioning. Institutional capital increasingly demands this expertise, and I believe that these steps would strengthen competitive positioning while mitigating cyclical risk. Here is my brief works cited, and thank you for listening.